Welcome to today's video whereby I'll be showing you market structure. So market structure is basically you knowing how to read the chart. Knowing and understanding this concept will help you to know when we are bullish or bearish, right? Same as fair value gaps, inverse fair value gaps, but then this one is pretty straightforward, right? It's understanding where the market is going. So without wasting any time, let's head into the chat and I'm going to show you how you can do this yourself, right? So what do we know about a trend? A trend is, let's say, an uptrend. What does an uptrend consist of? A move up and a move down, right? And a move up and a move down. What are these called? Usually this will be called a higher high, this will be called a higher low, and then there's another higher high, and then if we break above this, this will be called a higher low, right? That's what an uptrend is. Okay, so that's what an uptrend consists of. And then what do we have for a downtrend? A move down, a move up, a move down, a move up, a move down, so on and so forth, right? This will be called a lower low. This will be called a lower low. Those are L's, by the way. And then this will be called a lower high, a lower low, a lower high, a lower. If we put a new high, this will be called a lower low, right? Lower high, so on and so forth. So that's what a trend is, or a trend consists of, right? For a downtrend, a move down and a move up. For an uptrend, a move up and a move down. So now market structure is basically what I just showed you here, the trends, right? Knowing if we are in an uptrend or a downtrend, right? Knowing when we change from an uptrend to a downtrend. So for now, let's focus on spotting the trends, okay? We're losing focus again. I'm not sure why we keep losing focus, but perhaps I have to get a webcam. So anyway, let's look at this. For a downtrend, I'm gonna use the rectangle to highlight, right? Let me move this from here to here. What do we have? We have a move down and a move up, a move down, a move up, a move down, a move up, a move down, a move up, so on and so forth, right? That's for a downtrend, meaning we are bearish. Downtrend, bearish. Uptrend, bullish, right? So let's look for an uptrend. Here we go. I'm gonna use this to highlight that once again. What do we have from here? Let me use the brush tools. So from here, a move up, a move down, a move up, a move down, a move up, a move down, a move up, right? So usually what people know or what they find on YouTube is that a trend only happens when, let's say, you wait for a significant amount of structure before you can say this is a high, and a significant amount of structure before you can say this is a low, right? For example, you're gonna have to wait for a long move up, then a long move down, then another long move up for you to say, we are now in an uptrend, which is incorrect, by the way, right? So let me show you a live example. So people will say for this to be from here to there, for it to be an uptrend, they will say, we only have this low here, and then our higher high is up there, our higher low is down here, higher high probably all the way up here. They will ignore this, right? This structure in between. They will simply focus on the overall look of the structure, right? A high up there, then they will be like, then we have a higher low, high up there, right? Well, this is correct only if you are trying to explain the different structures from a higher time frame and a lower time frame, right? However, if this is the time frame that you're solely focusing on, this is incorrect, right? So instead, this is how you do it. Each and every candlestick represents a high and a low, right? So in this case, what do we have? Let's look at this one, for example, right? What do we have? We have blue, in my case, represents bullish movement, and then black represents bearish movement, right? So we have blue up until this, right? Then we came down here. This is a high right here. The moment we put a bearish candlestick and we again have another bullish candlestick which closes above the high of that bearish candlestick with a full body, then we consider this to be a higher high, right? And then this to be a higher low. We don't wait for us to see a lot of candlesticks before we can say, this is a high, this is a high. No, we read the chart using single candlesticks, right? Each and every candlestick has a role or is as important. So in this case, what is the example that I was showing you? This one here. We're gonna say from this low, we have this low, right? This is our, okay, let me use a different color for our brush. Let's see, let me use right? Okay, so from this low, okay, this one here, right? This black candlestick to this wick of this bullish candlestick here, that is structure, right? And then this downward movement, the black candlestick, we call this a low, right? We don't wait for a lot of candlestick before we can say this is a low. Okay, we lost focus again. This is getting out of hand. Sorry about that. Then this down here is a low, right? And then from this low we push up high. The moment we see a black candlestick, right, then we have a new high, right? And then the moment we see that new high gets pushed above, meaning we close with a full body, right? A full body, not a wick, a full body, then this, we consider this down here to be a higher low, right? So in this case we're gonna say higher, what is this, higher low, higher high, higher low down here. Let me do this. Then higher high, higher low down here. Let's see, nope. Okay, this one we're not gonna consider it as a high because we didn't close above this, right? So with a full body of the candlestick. However, we're gonna consider this to be the high because we closed above this with a full body candlestick. So it's gonna be higher low, higher high up there. Then what do we have? Lower low. Why is it a lower low? Because we made a move down and a move up. Then what did we do? We closed below this low here with a full candlestick, a full body of the candlestick, right? Meaning now that there is a change in the trend. From an uptrend we are now down in a downtrend, right? And then what happened afterwards? This was our new lower, not that one, but this one was our new lower high, this wick up here, right? What happened? We came up instead of let me do this, instead of respecting this high, what did we do? We closed above it with a full body with a body of the candlestick. You see, now what does that mean? We are now again in a bullish order flow, or we are again in an uptrend. See, so that's how you read the charts. Now let me explain something quickly, which is a break of structure. So a break of structure signals to us that there's a change in the trend, right? So let's say we have a move up, a move down, a move up, a move down, a move up, and then instead of us having a move down and a move up, what do? We come down and we close below this, right? This right here we call a break of structure. Now what does it signal to us? That there is a potential. It signals to us that the market is changing its trend, right? And then if we respect this high up here, meaning we put a lower high and a lower low, then it's confirmed we are now in a downtrend, right? However, if instead of us putting a new lower high, we push up and closes above this, then it means the uptrend is continuing, right? This was a break of structure showing that there is a change in market or in order flow or in trend, right, from uptrend to downtrend, right? But then because now we closed above the what was supposed to be our this was going to be our lower high, we pushed past it and broke structure to the upside. Now we are bullish, right? However, I wanted to explain a break of structure. So this is what happens for a move up. If we close below a higher low with a full body of the candlestick, by the way, right? Not a wick. If we just wick it out and come back and respect this higher low, then that means we are still in an uptrend, right? And then for a down movement, same applies. Move down, move up, move down, move up. Then perhaps we do this. Okay, let me not confuse you. Move down, move up, move down, move up, move down, move up. Then we break structure up here, right? This signal to us that we are about to change the trend from a downtrend to an uptrend. Then that's usually what happens, right? So let me show you some real life examples of what I'm talking about, and then you can go and practice this yourself. So let me do this. Okay, here's an example for you. So you see from this point here, from here we have a move. Okay, from here actually we have a move up, a move down, a move up, and a move down. What did we do? We closed below this low with a full candle, with a full body of the candlestick. And what happened afterwards? We had a move up and a move down, right? Showing that we are now bearish. And then what happened again is move up, move down, right? This is our new lower high, by the way, right? And then what did we do? We broke structure to the upside with closing with a full candlestick. I mean full body of the candlestick, right? Then what happened? We had a move down, then a move up, a move down, move up, move down, move up, so on and so forth. You see? So that's what a break of structure is in practice. Let me show you another example. Let's see. Okay, here. So we have from down here a move up, a move down, a move up. What kind of a trend is this? I'm gonna give you a few seconds so you can think about it. Don't lie to yourself. Yes, it is an uptrend. You see, we are leaning. Yes. So now we have a move up, a move down, a move up, a move down, right, a move up. Did we close? Did we get a full candle closure above this high of this week? No, we didn't. Instead, what happened? Started ranging, then we put down this low, right? We consider this low because of the wick, right? In case we close above this wick up here, this will be our new low. The wicks we do consider for lows, right? But then for a change in order flow, we only consider the candlestick's body. So what happened? Started ranging. Then what did we do? We closed below this with a full with a body of the candlestick, right? Meaning this was a move up, then a move down, right? Are you with me? Okay, so I think I made a mistake. But then this might confuse you a bit. Okay, but then this is how it goes. Let's see. This might be a bad example, but then let me explain. So move up and move down and move up. Then let's see. I move down here. So move up, move down, move up. We have a move down here, then move up and move down. We broke structure down here. Then we started ranging. We put out that wick, which doesn't mean much up until we close with the full body, right? So started ranging. Then we closed below this low with a full body. I'm not sure if you're with me on this one, but then it might be a little bit confusing. However, there was a break of structure down here, and then what happened afterwards? Once the break of structure was completed, perhaps this is not the best example. Then we have a move up, a move down, a move up, move down, and so on and so forth, right? So let me try to find a good example which won't be as confusing for you. This one requires a bit of experience. So once you get used to reading this, then it will become easy for you. So let's see, what do we have here? From here we have a move up, a move down, a move up, a move down, a move up, move down, move up, then a move down, right? What did we have? A move up, then a move down, then we closed below this low with a full body of the candlestick, right? And we moved up. This signals a break of structure, meaning from an uptrend to a downtrend, right? So what do we have now? Move down, move up, move down, move up, move down, move up, move down, move up, range a bit, then move down. You see, so that's market structure for you. Let me remove all of this. So you read the market structure using the candlestick. You don't have to wait for a lot of candlesticks before you can say, we have a high, but then there's a lot of higher highs and higher lows in between, but then you're like, this is a high, and ignoring everything in between, right? So you have to take note and read each and every candlestick, whether it moves up and moves down. See? So that's it for market structure. If it's a bit confusing for you, perhaps try to rewatch the video 2 times, 3 times, and then again open your trading view and look for real life examples to train your eyes so that you get used to it, right? And then you'll be good. So this is market structure explained for beginners. So with that being said, thank you for watching the video, and I'll see you on to the next one. Cheers.